Thank you, and very pleased to be in Scotland. Very pleased. This is actually the first time I've ever presented at Shares, so I thank everybody at Shares for the kind invitation. I guess it comes with a contribution to the great magazine, but very pleased to be here. Company's WRES. We're focused on tungsten. We have 5 projects. The 2 most important ones are Parrilla, which is in southwestern Spain, about 2 hours north of Seville. Regua, which is in northern Portugal, about an hour and a half's drive east of Porto. And then we've got 3 very, very good advanced exploration properties. We've got Tarouca, very close to Regua. We're going to work out how those 2 projects go together and substantially increase the size of the Regua development. And we've got copper and gold. The gold project that's front running is São Martinho. That's currently a JORC of 111,000 ounces. We've just had a very, very successful drilling program. We've got more drilling that we're going to actively pursue, and targets to take that up to about 500,000 ounces in the next step, and hopefully eventually get to that magic 1 million ounce mark. We just added a very exciting copper project to our portfolio, Tungsten. That's got 2 former copper mines, very good grades, very good reserves of copper. I said at the beginning we're a tungsten mine, a tungsten company. What we've decided to do is to package up a very good Portuguese copper asset and put them in a new vehicle. We're going to get that value back to shareholders, so that's one of the things I'll mention. We'll come back to it at the end, but we're going to refocus the company, focus on the tungsten projects, which I'll tell you a lot about in a moment, but also take the opportunity to make sure the shareholders can start to see some of the very substantial values sitting in our copper and gold portfolio. So tungsten. Who knows anything about tungsten? It was a very important metal through the war and through the Cold War. Russia had gigantic amounts of tungsten in their stockpiles, as did the United States. One of Barack Obama's last steps was to sell all the tungsten in their US portfolio. But tungsten's the world's strongest metal, hardest metal. It's got the highest boiling point. It's quite unique from that perspective. What's it used for? It's used in aerospace and auto cutting tools. Anytime you want to form steel, cut steel, make engines, you need something incredibly hard, and tungsten is the metal of choice in terms of forming and shaping steel. It's also used a lot in mining and oil and gas. Think about it. You've got to drill, you've got to cut through the Earth's surface, you've got to frack very large shale gas oil fields. When that happens, you use a lot of tungsten. It's used in construction. All the very rapid growth in all the global cities of the world, where you're seeing these property booms and these huge expansions. Think about the excavators, think about the cutting tools. It's all driven by increased tungsten consumption. Tungsten's had a mixed 15, 16. 17's looking good. All the forecasts say 2 things. One, the tungsten price is heading to above $300 per MTU. Think about $30,000 a tonne. And secondly, there is an acute shortage of what we produce, which is tungsten concentrate. So all the customers in the United States and all the customers in Europe are getting short of tungsten concentrate. That's going to be an opportunity. Tin's the other thing we produce. Tin's had a great run the last 2 years, gone from about $14,000 a tonne to $20,000 a tonne. So tin's about probably 15% of our revenue stream. I love tin. This is our portfolio of tungsten projects. Just to put it in context, because we do have a portfolio that takes us to world scale, The largest tungsten mine in the world at the moment is a project called Nui Phao, which is north of Hanoi in Vietnam. It's owned by a company called Masterman Resources, and that company's got a market cap of about $500 million and generates about $90 million of EBITDA from a project producing about 5,500 tonnes per annum of tungsten concentrate. Where are we? Priority number one is putting La Parrilla into production at 2,500 tonnes of tungsten concentrate. That's what we're focused on financing, that's what we're focused on developing, and I'll spend a lot of time on La Parrilla. Following La Parrilla 1, we add Regua, which is in northern Portugal. That'll add 1,300 tonnes and take us up by 50% in our production rates. And then in 2020 we'll add the final stage expansion in La Parrilla and take us up to a total of about 6,300 tonnes. La Parrilla will be the largest tungsten mine in Europe, and overall WRES will be one of the largest non-Chinese, one of the largest global players in the tungsten market. La Parrilla, it's a flagship mine. It's in an excellent location. It sits within Spain and the EU, slightly easier to manage than Zimbabwe. We sit with the mine right next to a 4-lane highway and a very large water channel, so it's got exceptional infrastructure. It's a large, long-life mine, probably one of the largest tungsten deposits, certainly in the Western world. The ore is coarse grain, which means we're able to process it using principally gravity, and we're able to get very, very low costs as a result of that. That means we're in the bottom quartile of the global tungsten cost curve, and that's where you've got to be competitive. It has produced tungsten. We've sold tungsten to our customers. We know it successfully recovers this coarse grain tungsten. We've sold product globally, but mostly to Europe, Israel, and the United States. And we get a very nice contribution from the tin. In terms of our development, we're focused on 2 stages of expansion. The first we call T2, which is to take our mining rates up to 2 million tonnes per annum of run-of-mine ore, which will produce 2,500 tonnes per annum of tungsten concentrate and around about 450 tonnes per annum of tin. We're in the process of building that operation at the moment. We'll start production in the second quarter of 2018, so a relatively short period of time away. And that first stage will generate revenues of around about $35 million US and EBITDA of about $16 million US. We'll then, and we've built into the designs of the T2, the ability to quickly expand to the T3.5, where we increase our mining rate to 3.5 million tonnes per annum, almost double our production rates, and very, very significantly increase our revenue and our earnings stream. Overall, that's a net present value of around about 100 million, and because our capital costs are incredibly competitive, we generate a very high internal rate of return for shareholders. Payback's about 3.5 years from first production. To date, we've invested about 15 million US, and the key number to make all of this happen is 25 million to generate these kind of earnings and cash flows. We're very much focused on the financing of that 25 million slice. We've appointed a leading debt advisory company in Australia that's recently financed Syrah, the graphite project in Mozambique, and Pilbara Minerals in the lithium space in Western Australia. They're highly confident that we'll be able to put in place 20 to 21 million of competitive debt financing, leaving us a relatively modest balance to fully put the La Parrilla mine into production. Why is La Parrilla eminently financeable, and why does it generate very substantial cash flows? Well, the first and most important step is we're at the bottom of the cost curve. We're at the bottom quartile of global tungsten mining costs, and that includes compared to the Chinese. We have a unique combination of very, very low capital costs to build this project, and we're world competitive with Nui Phao, which is the other low-cost producer in terms of our operating cost. Why do we have very, very low capital costs? Well, location makes a huge difference. That infrastructure is sitting there imminently accessible. It's an open pit mine with almost zero pre-strip, so we're moving straight into the ore zones without a huge amount of capital to get to them. The primary infrastructure is already in place. We have a simple, low-cost gravity separation circuit, so there's not a lot of power, there's not a lot of chemicals, there's no smelting processes. We go to a very high quality tungsten product, principally with spirals and shaking tables. We've got a fit-for-purpose plant. We've designed it to be able to be expanded very quickly, but we're not over-capitalising it, and we're getting the scaling right so that we can fund 100% of the expansion to 3.5 million tonnes from the existing cash flows. This is the location. This is the main highway. You can drive from the highway to the mine in 5 minutes. General Franco kindly built us a very large water channel right next to the mine, which will be very useful for the wider development. We've already got a concentrator built, we've got the labs built, we're connected to the power grid. All of that makes mine development much lower cost and also much faster. This is our existing concentrator, and I spoke earlier about gravity. We achieve very, very efficient rejection of the waste and very efficient concentration of the tungsten ore into the 66% tungsten that we sell to our customers through spirals, some limited flotation, shaking tables, and then this yellow box which is called an electrostatic separator. Probably could sit on that table there, but it can take our stream of tungsten and tin concentrate and separate very, very efficiently the tungsten from the tin, which gives us a very nice tin byproduct credit. These are the parts of the development to 2 million tonnes per annum that we're procuring. We've got vendor finance and a contract for the jig from All Mineral, the big German group. We've very advanced on placing the contract for a new expanded state-of-the-art concentrator, and we've also substantially advanced the procurement of a very competitive crushing package. Those three pieces of plant are all in what we call D&C contracts, design and construct. So the vendor guarantees the maximum price and guarantees the schedule. So probably about 80% of our capital's in these three plant items, and they're progressively being let. This is the staging. We start at 2 million tonnes producing 2,500 tonnes of tungsten concentrate. We then expand very quickly at modest incremental capital cost to 3.5 million tonnes and 5,000 tonnes per annum. Operating costs. I showed you the cost curve at the beginning. It's really important in any commodity, but also in mining when you go through the cycles, to be very low cost. We're very low cost because mining in Spain and labour costs in Spain and mining labour costs in Spain are very competitive. A truck driver in China is paid $18,000 to $20,000, the haul truck driver, per annum. A truck driver in Spain is 22,000 to 24,000 euros. So everybody thinks China is this incredibly low-cost place. China's labour costs are going up and up and up. Spain is a very, very competitive place for mining, and you've seen some of the companies such as Berkeley and Alitalia demonstrate that in their cost structures. Other reason our costs are low is the ore is of such a shape that the tungsten and tin sits with quartz veins. The waste is in this very light shale. You run it through our processing plant. you're able to use gravity to very, very efficiently reject the waste and recover the tungsten. So we can go very, very quickly to much higher levels of grade before we go into our concentrator, and that gives us a substantial advantage. We also get a very good tin credit, so when you take the tin off your operating costs, you get down to very competitive levels. And those levels are shown here. Below the line is the tin credit we get, and we're averaging less than $100 per MTU, or put it another way, less than $10,000 per tonne, which puts us in a very, very competitive position globally. If you can get below $100 a tonne, you're one of the lowest cost producers in the tungsten world. This is the mining close-up. Where we'll start mining is in this red area through here. Great place to start, because in our recent drilling program we had some spectacular intersections in this La Parrilla South area. Those intersections were so good, when we finished the JORC resource upgrade, we got an overall increase in our resource and our grades of tin and tungsten, but as importantly, we were able to significantly lift the grade that we're able to feed into the plant in the first couple of years. Higher grade into your plant first couple of years makes a big difference to your cash flows. Just to give you a sense of that from the underground or 3D section, that purple and pink areas, this is from surface. We're averaging twice to 3 times the average grade of the ore body at surface where we are planning to mine as part of the development of this project. So that's been a very, very significant win for us, and we announced those results last week. What does this look like in terms of cash flows, and how does the financing fit together? We have a very strong earnings stream, which we build up to as we expand to that 3.5 million tonnes per annum. So we're up around the 40 to 45 million US dollars per annum in EBITDA. This is a bit more detail, and I probably shouldn't show slides with this much detail in them, but I really just wanted, because it's really important for our shareholders, to understand how we finance the project. We've already invested about 15 million in the project to date. A debt financing facility of 21 million, plus a relatively modest amount of equity, takes us fully into production, and it allows us to start to tap in very quickly into these levels of earnings. So we've almost got a 3-year payback or a 2-year payback from the start of the T2 production at La Parrilla. The financing on the debt side of things is advancing, and we expect it to have it completed in the next 3 to 4 months. In the meantime, we're using our internal resources and the focus of the team to move the project quite substantially towards that start-up date and making sure we keep on schedule. So very strong cash flows, very strong cash flow build-up. Very interested in doing what Caledonian's been doing and getting the money back to the shareholders through dividends. So let's get the debt in place, the project finance up and running, strong cash flows, and then we've got to look at the maximum way in which we reward shareholders for their patience. Second project's Regua, and I've got 2 minutes. Thick, high-grade veins. Regua, adit mine. We use a crusher 10 kilometres away, simple gravity concentration circuit. That's going to be in production in 2018. Nice follow-on project. Copper and gold, as I mentioned, we've had some phenomenal results. We're going to look to move these assets directly into the hands of the shareholders, and that will be a big win for all the existing shareholders as well. So, there you go. WRES, 2 tungsten mines under development. La Parrilla and Regua are advancing well. We've got a lot of exploration potential. We think tungsten's going to move very strongly up in the next 12 months, and we're looking forward to getting both these tungsten mines in production over the next 2 years. Thank you. questions?
Sorry, Charles Scott, I'm a shareholder. Some of that information about the funding and the institutional funding, the debt financing, I'm sorry, it would be a better term to use it. I haven't seen that before. Is that something that's been disclosed to the market?
Well, we've been working on the financing, and that's the debt financing update. We're certainly progressively giving the market a strong update in terms of where we are on the financing, and we'll do that over the next week or two.
I see. Thank you.
The share price performance in the last couple of years has been poor. I bought in it. I took part in a number of placings, and one I went in at 0.3. I got out at 0.9, so I'm happy.
Okay.
And I went back in at 0.5 and got out at 0.75, and I went back in last time at 0.45. And obviously we're not doing very well at the moment, but I'm presuming that there's going to have to be a significant placing take place to provide the company's equity in relation to the machinery financing.
Well, look, in terms of the 3 pieces of plant, the vendors are stepping up to the plate and providing 50% financing. The debt financing that I spoke about and that Charles alluded to, that is going to cover the great bulk of the financing requirements of the project. We have options to fund the gap, which is around about €3 million. That may be from customer financing, and we're actively having discussions there. That might be from strategic or joint venture financing. But we're well on the way to full financing of a large-scale project, and if you like, the gap is very modest and certainly well within the capability of the company.
Unlikely to be dilutive.
It's unlikely to be dilutive. I mean, I think given the strong cash flows, and those cash flows are stronger because of the very strong results we've had from that Fast Track Mine South area, we've got a project with very, very strong fundamentals, very strong ability to pay down debt in the first couple of years of operations, and that means we can put the sensible amount of debt on the project to put it into production. That at the end of the day is going to be the thing that hopefully will allow you to go from a point to a 30-cent share to a $1 a share again.
On your open pit development, do you face any risks from EU environmental legislation, and if so, what would it cost to mitigate it?
Look, Spain is very much part of the EU and signed up to the various EU legislation, so we've got full environmental approval, full mine authorisation. We're in Extremadura, which is a relatively poor region of Spain. They're very supportive of the development of the project, but also have, they've got a history of mining, and they have very good compliance and very good people in the ministry to work with us on the approval. So we're very positive about the government support, our compliance with environmental legislation and taking the project forward. Tungsten is one of the most neutral metals in the world. It doesn't oxidise, it doesn't have any particular significantly, it doesn't really adversely affect the environment because it's neutral. If that was the question.
Okay. Any other questions in the room? In which case, only remains to thank Michael. Thank you very much.